This is IG as we look ahead to the coming week here on the markets. And well, today's markets welcome what was a robust US growth reading this afternoon. The US economy growing more than expected, 2.9% was the reading. Next week, though, we head into November after a month of spooks, with sterling volatility becoming a permanent theme these days and OPEC continuing to tease the price of oil. We're going to get crucial central bank data from all corners of the globe, and next Tuesday will represent the one-week countdown until the US election. Well, joining me now to look ahead to all that we can expect is Josh Mahoney. Thanks very much for doing it. We've got a very busy week. It's all about central banks next week. Before we give a rundown of the rest of the economic data to look ahead to, how do you expect the week to go?
Well, I guess, look, like you said, there's a whole handful of different central bank readings coming out. The problem is that none of them are going to move, in my opinion. You know, obviously we're going to be looking at some of the sort of linguistics around it and whether, you know, we're going to try and glean from it that maybe they're going to move in the future, but I don't think we're going to do anything. One of the markets we're going to be looking at today is the Australian dollar. I would say RBA is at least one where at least a few analysts are saying that they could move, but certainly that's going to be a big move. Of course, first week of the month means that we've got some of these big readings coming out in terms of the UK PMIs. We've got the payrolls coming on Friday. We've got the ADP. So it's certainly going to be a very busy week. And coming off the back of this huge GDP reading over in the US, the question mark is, are we going to see continued strength in terms of the US dollar, and what's that going to do in terms of the whole FX market leading into next week? Let's
look at those markets in detail in just a moment. Let's give you a rundown of exactly what to expect when, starting on Monday with that economic agenda, when all the focus really is on Japan to start the week. Industrial production, retail sales, construction orders. Then heading over to here in Europe, we get inflation and GDP. GDP, a really key theme over the coming 7 days. US, it's income spending. We get Chicago PMI and the Dallas Fed manufacturing index there. Moving on to Tuesday, as I said at the beginning there, that is marking a week to the US election. We get Australia rate decision, as Josh just said, interest rate decision also over in Japan. China, an interesting one there, getting those PMI numbers coming through from there. Also PMI here in the UK and in the US, and the GDP out in Canada too. On Wednesday, that's when we get the Federal Reserve rate decision, as you can see there at the top of that list. Amongst these others, the nationwide house price index here in the UK, jobs numbers in Germany as well. Interestingly also, of course, those crude oil inventories over in the US. Moving swiftly on to Thursday, and these are some things that could be moving the markets. Of course, another interest rate decision here in the UK. China, further PMI, those services PMIs numbers coming, not just in China, but also here in the UK and indeed in the US. And jobless claims coming out from the US ahead of non-farm payrolls on Friday. Mentioning Friday, so let's move swiftly on to what we can expect on Friday. Of course, non-farm payrolls is the key bit of data out on Friday, though with just a few days before the US election, how much prominence does it really have this time around? Services PMI from Japan and Germany, also ones to watch there. So, as you mentioned, central banks a key theme, non-farm payrolls a key theme. For you, the key trades surrounding the economic data next week?
So I thought I'd start off with what's happening in terms of Australia. Like I said, I think that the RBA is not going to move, but some people do, and that's where you're going to see some sort of decent price action around it. If everyone thinks it's going to go one way and it does go that way, you generally don't really necessarily see all that much volatility. Looking at the Australian dollar, we can see here that essentially we've got this symmetrical triangle. We're around about the bottom of that triangle, so I would think this is a good area for us to start turning higher once more. The daily time frame essentially shows you just that. We've come into the 76.4 retracement. That deep retracement means you get a 3-to-1 trade for a move back up towards a high 77.32 versus a break back below the 7500 mark, 75.05. I personally prefer that rally. I think that we're going to start turning higher from here. We've got trendline support. We've also got the fact that on the daily we've broken to that new high. We broke above the 77.10 into the 77.32. If you look at some of the other markets as well, we've been seeing some of the other Australian dollar pairs breaking higher. So that's going to be an interesting one. You know, I don't necessarily think we're going to see a move in terms of the RBA. We have seen strong CPI, and generally the sort of worldwide sort of inflation path at the moment seems to be towards the upside. So I don't necessarily think that there's room for them to actually do so. Next, I wanted to look at what's happening closer to home. We have got, on Tuesday, we've got the manufacturing PMI. On Wednesday, we've got the construction PMI, and on Thursday we've got the services PMI, trying to do two things at
Plus,
once.
of course, the Bank of England rate decision, of course, which will play into this trade as well.
Plus the Bank of England as well. So very busy week for the UK especially. You know, I guess we're coming off the back of 2 months now of very strong readings in terms of the PMI readings. We don't necessarily think that we're going to see anything for this year from the Bank of England, and this probably will solidify that. I think we're largely going to see numbers that are not too dissimilar from what we've seen previously. I don't think we're going to fall back towards the 50s or alike. Certainly, if we're going to look for sort of outperformance, I would think that the outperformance is probably going to continue within the manufacturing sector, which I think benefits more from a weak pound than some of the other sectors out there. In terms of price action, I wanted to look at euro sterling. Possibly the monthly chart is a little bit more sort of indicative of the wider trend. You can see we rallied into this 94.12, that swing high from dating back in 2009, and we've been selling off ever since. Doesn't necessarily mean that it's a top, but certainly the month closing out with such a long upper wick isn't necessarily a bullish sign. But the interesting thing is, on the 4-hour chart, we can see that actually we've had this period of consolidation, and we've actually been creating this triangle pattern with this ascending inside trend line, previous resistance turned into support, and then more recently we've got this descending trend line which has now been broken, and crucially we've broken above the first swing high at 89.80. If we look on the hourly time frame, then actually we can see here we're pulling back, and that pullback is actually a good thing because it gives us a better opportunity to get in at a, in my mind, cheap price. So as long as we don't break below, say 80, if we just move that to the lower rung of these swing lows, say 89.40, then a deep retracement into your 89.60s, 89.55s, I would say is probably a good area to be getting long for euro sterling. I think the trend towards further weakness in the pound and actually a resurgence in the euro looks like it's coming back into play, and that should mean that we'll see upside for this pair in the next week.
I mentioned non-farm payrolls, of course, the big event of the week, not just central banks. Non-farm payrolls, of course, normally such a big economic data to be watched. Is it as big this week, bearing in mind we've got the US election just, 4 days afterwards? Yeah,
definitely. I guess there's an argument to be had that actually the result of the election is a lot more influential on what's happening in terms of the Fed and the markets than one release from the payrolls. It certainly is the case, but nevertheless, it is going to have a bearings. We've now got this very strong GDP reading. Payrolls, they've not been great, they've not been awful, in the mid-150s last time round, and as such, you know, it probably makes sense that if we see a relatively respectable reading this time round, and if we see, you know, Hillary Clinton actually win out, then you would expect to see a December rate hike, in my opinion. Nevertheless, irrespective of whether it goes up, down or sideways, you always see volatility around about the non-farm payroll, so it's certainly something that we're going to be looking at here at IG. In terms of price action, I thought we'd look at the Dow just because we've been looking like we could possibly start to roll over in this market, and certainly if we start hearing more about how a December hike is on, then you would think that we'd see weakness in terms of equities. The daily looks something like this: symmetrical triangle pattern, ascending highs and lows, ascending lows, descending highs. But in terms of shorter term price action, we can see that essentially we've been near enough range bound over the last week or so, with the highs around about 182.60s to 182.70s, the lows around about 180.40s to 180.60s. We're coming towards the top end of that, and as we get towards the top end of that range, it starts to look a little bit expensive, and you'd want to start selling it back down towards the bottom of this range. Largely, I see this current pattern as something similar to the previous pattern that we've seen here, except we've seen that step down, so I'd expect this to resolve with another move towards the downside, and as such, the higher we go, the cheaper it is, in my opinion, and the closer we are to what I would define as where my stop loss might be. In terms of where I'd put that stop, you know, you can say this area, this cluster of resistance from the top end of this range is going to be an interesting area. 182.80 is that peak. It wouldn't necessarily negate this this sell-off from 184.05. So you could say the break above 184.05 ultimately would rule out the next move lower. But certainly, if we did break up above that previous resistance, 182.80, then you wouldn't necessarily want to be short, because it would point towards a deeper retracement back towards, say, 183.65s.
And of course, we're live here at IGTV for those non-farm payrolls number, not to mention the webinar that Josh and Chris do before that, leading up to that actual announcement there. Let's move to the company news now and what to expect. And on Monday, some of the companies reporting, and we've got WPP, a key one, of course, that's always seen as quite a barometer of the UK economy, how much people are spending on advertising. We've got Sentiment, Honda Motor, Mitsubishi Heavy Industrial, Qantas Airways as well, and Swiss National Bank. Tuesday, the big one, of course, is BP there. In the last quarter, you remember they delivered a negative earnings surprise of 11.5% there. We've also got Shire, we've got Virgin Money, Weir Group, Shell, of course, alongside BP. Be interesting to see those two and how they compare with the numbers. Money Supermarket, Standard Chartered, Go Ahead. I don't have to read them all out. You can see them there on your screen. Let's move on to Wednesday and some of the companies to watch out for there. Let's pick it out a few for you. On the high street, you've got the likes of Next. Facebook, of course, that's the big one over in the evening, reporting third quarter results there. What stocks up around 10% since it reported what many describe as, I suppose, jaw-dropping second quarter growth. The stock, of course, that we've seen hit all-time highs, so definitely one to watch there. Let's move on to Thursday in terms of what companies we're watching there. We've got the likes of Tate & Lyle, we've got the likes of Société Générale, Air France, KLM, Adidas, an interesting one at the moment as well. Tate & Lyle, Smith & Nephew. Do I have to go on? Glencore as well there. So let's move on to Friday. And this is what to expect. See, it doesn't end, does it? EasyJet, one to watch on Friday, as will BMW and indeed Commerzbank too. So the earnings keep on coming, don't they? BP, as I mentioned, I think is a key one at the moment to watch, especially considering what we're seeing in terms of the price of oil.
Yeah, generally, I mean, like you said, there was a negative earnings surprise last time. Generally, we've always seen them actually outperform on those earnings surprises. It's going to be very interesting to see how they perform this time round. I think in terms of the sort of exploration and the production side of the business, generally, people are expecting them to underperform because of the fact that actually, you know, we have seen the markets generally sort of come off quite a lot. In terms of the price of oil, we've seen production come off as well. So how much are they able to ramp up production and be able to sort of respond to the current prices in the markets? We have seen its share price actually responding very well, and you would expect so. You can see the back end of this year has seen these two significant legs higher. We've seen around about 55% rise in BP over the last 8 months, and crucially, it's taken us back up against, or back above this 487, which is your swing high from April 2015. You can see we're starting to weaken around there, and obviously when you see such a sharp rally, you would think that at some point it's got to give something back. And the question mark is, are we going to start rolling over? Well, if we can sustain price action around about this 487, we could use it as leverage before we see another leg higher. And certainly if you look on the 4 hour, we've been near enough range bound since we've been up around these levels. So around about that 498 to 480, that is the current range. The breakout from this range is likely to determine our next move. If we see a break towards the downside, you would expect that we'd get a shorter term or short to medium term retracement before we break higher once more. I do think that people are happy to be getting back into this market after the sort of price of oil has been in the doldrums, and now people are sort of looking for whether we're actually going to get this deal out of OPEC, whether it's going to come to fruition or not. Which we currently have discussions ongoing at the moment, and obviously oil price plus earnings means that BP shares should be pretty volatile next week.
Okay, I mentioned another one, Facebook. I mean, can Facebook deliver? We've had a real mixed bag of earnings out of the techs this past week. What are you looking for from Facebook?
Yep, definitely. I mean, look, the difficult thing is that Facebook's been so incredible in the past that it's always difficult for a company like that, beyond trying to create whole new products, which is what someone like, say, Amazon would do. And it's always difficult for you to squeeze yet more juice out of than Orange that's done so well in the past. So, you know, what are they like on the sort of user base side of things? What are they like in terms of engagement? Are they still able to keep those numbers up? What are some of their other products, the likes of sort of Instagram and the like, are they still being able to grow in terms of their user base? And then obviously, you know, the sort of golden goose, so to speak, is the advertising revenue, and whether they can continue to grow that out. Generally, the sort of platform that it is, it allows you to actually really target that advertising, which makes it a favourite amongst many advertisers out there. We can see on the weekly time frame, essentially it's been a very consistent chart. You can see these wide swings have generally turned into this gradual move higher, and I guess if you're owning a share, it's not necessarily too much of a bad thing to own a share that gradually moves higher rather than has these huge swings. Now, in terms of shorter price action, the daily looks something like this, and we can see here generally it's just a step move higher. We have managed to get back towards this sort of 133.60 mark, which was the previous peak here back in the 27th of July. And I do expect another leg higher. You can see here that we've seen this retracement recently. We're starting to see it gain once more, and I don't think we're going to break below this 12,680. And as such, I think this will be a good area to be getting long, and I do think we're going to see further upside for Facebook to come. Any downside in terms of the similar kind of thing that we've seen with Amazon, I think people are just going to buy into it because it's going to be around for a long time, and I think it will be substantially higher than where it is at the moment in the coming year or so.
So those numbers out after the bell on Wednesday. Let's pick up on one that's out on Thursday, and that is, of course, Randgold Resources. Interesting because of what we've seen in terms of the gold price recently, and indeed the commodity market as a whole.
Yeah, definitely. I mean, I think the commodity sector's actually started to really pick up pace. The difficulty is that this gold has this whole fact that it's not necessarily used for all too much. Yes, okay, in India it is, and everyone seems to love it in India, but everywhere else, we sort of perceive it as this haven, and sometimes it becomes a haven.
That shine as well, hasn't it, to a certain extent?
Sometimes it's a haven, sometimes it's not. We don't really know. And recently we've seen this sort of big drop off a cliff for gold following a very strong 2016 so far. So I would say, people are starting to worry a little bit as to whether, it's going to start coming undone, this sort of big resurgence in the price of gold. And obviously that's going to be the mainstay of whether Randgold, which isn't diversified, whether it's going to do well or not. And we can see that in the share price. You see, this is the weekly, and you can see essentially we've got this massive rally starting the back end of 2015, beginning of 2016, and we've seen, this is very similar to gold. We saw that period of consolidation, that next leg higher, and now we're seeing it falling back, much like we're seeing in gold. Now, in gold, we pulled back to the 76.4. In Randgold, we've pulled back just past the 70% and halfway between that and the 76.4, so not too far from it. We're starting to see a little bit of a boost in terms of gold prices, and that would likely be reflected in this market. So I guess being able to buy into this company is, as much as anything, a view on gold, and we are getting this deep retracement. So if your view is that gold isn't necessarily going to be down and out and it's going to have some sort of resurgence, then this is probably a relatively cheap area to be buying it. The deep retracement means essentially you can put your stops below your 56.40s, around about that kind of area, and then be looking for it to break back towards your sort of 98.20s and above. That deeper retracement means that you get a better risk to reward for that trade. So there is a potential that we could start turning higher, and certainly earnings figures are usually pretty useful for making that sort of move happen a little bit faster. If you look at price action itself, we're actually in this wedge pattern. The wedge is generally a bullish formation, so if we saw that next leg lower into this area once more, that could be a really good area to be buying into trendline support and buying into what is generally a bullish pattern felt within a sort of retracement that we've seen over the past 4 months.
So as Josh said, Randgold Resources is just one of the companies to watch, as is BP and Facebook, but there are a host of others out there as well to be keeping a close eye on that could really be moving in the markets. But essentially it is all about the economic data, those central banks reporting, the Bank of Japan, the Bank of Australia, we've got the FOMC, we've got the Bank of England as well, and its inflation report, and of course non-farm payrolls on Friday. So it is set to be a very busy week. Keep safe with your trading and have a very good weekend.